My name is Scott Cramer and I'm with Union National Mortgage. I'm going to give you a brief overview of some of the products and guidelines available to meet your needs of buying a home. The product we choose is based on many factors such as household income, debt load, credit history, and most importantly, the amount of cash the home buyer has for down payment and closing cost. The products that I offer are conventional, FHA, VA, and USDA rural development loans. Now we will explore a brief overview of these products. A conventional loan is a fantastic product for someone with outstanding credit that has the resources to make a down payment between 5 and 20%. With conventional financing, a borrower can receive a seller concession of 3% of the purchase price. The buyer will be responsible for closing costs that exceed the seller assist, the down payment, and 2 months worth of payments post-closing that we call reserves. The terms available are anywhere between 10 and 30 years. Now we move to the group of loans that are often referred to as government loans. FHA is the most common government loan. It is much more flexible with credit scores than a traditional mortgage. The borrower can make a down payment with as little as 3.5%. In addition, the seller can pay closing costs up to 6% of the purchase price. There is also typically not a reserve requirement, so even the most creditworthy borrower may want to use FHA simply because the cash needed for closing is much lower than with conventional financing. The buyer does not have to be a first-time buyer, and there is no income restrictions on the household. Gifts are allowed for the full amount of closing costs and down payment. The rates are also very competitive. VA loans are available to those buyers who served our country in the military. The guidelines are very similar to FHA, including 6% seller concessions. Like FHA, gifts are allowed for the closing cost. The biggest difference is that a VA loan does not require a down payment. The final product we will review is the Rural Development Guaranteed Loan, or USDA. The house must be located in an area that is considered rural. Many counties like Indiana, Jefferson, Clearfield, and Elk are target counties, meaning the house can be located in any community regardless of its size. The loan is available for low to moderate income households, but in Indiana County, for instance, a 1 to 4 family household can earn up to $74,050 and still purchase with no down payment. The seller can pay up to 6% of the purchase price toward closing cost. In some cases, borrowers can purchase their home with as little as $1,000. I hope by watching this you are getting an overview of all that goes into choosing the right loan for you. Home buying is one of the most important financial decisions you will ever make. 2 things can make all the difference in the world in your home buying experience. Number 1, you must find a great realtor that you can connect with, an agent that takes the time and understands your situation and your needs. Second, with loan requirements tougher than in years past, it is important that you sit down with a licensed mortgage consultant that explains things to you in an easy to understand and clear method. I want to be the one who helps you. I look forward to sitting down with you and analyzing your needs. Call me today. Thank you.